Good day and welcome to Resus Property Consultancy Training video. Today we will discuss the various steps in owning your dream home through Pag-ibig, bank loan, and in-house financing. What is a Pag-ibig housing loan? The Pag-ibig Fund is also known as the Home Development Mutual Fund, was established in 1978 by Presidential Decree 15303 to serve the two basic needs of Filipino workers: National Government Savings Program and affordable housing. Qualifications: Pag-ibig only offers housing loans to its members with 24 months worth of contributions at the time of application. Most banks, on the other hand, don't require borrowers to be a member or a savings account holder to qualify for their housing loans, provided that the applicant can present a proof of income and employment. Loanable amount: borrowers under the Affordable Housing Loan Program can avail of housing loans up to 750,000 pesos. To regular applicants with above average income can borrow up to 6 million pesos. Interest rate: those who are availing of Pag-ibig housing loans enjoy lower interest rates, as low as 5.375% for regular housing loan borrowers in a 1-year fixed pricing period. You can check on the website of Pag-ibig for the updated interest rates. Also, Pag-ibig isn't allowed by law to increase its interest rate beyond 2% per annum. By contrast, banks don't have a ceiling on their interest rate. Long term: in Pag-ibig, borrowers can choose how long they'll pay off their housing loan, up to 30 years as the maximum loan period, not more than 65 years old at the time of loan application, and not more than 70 years old at the loan maturity. Miscellaneous fees: Pag-ibig guarantees applicants that they will not be charged with other fees than 1,000 pesos to be paid during application and another 2,000 pesos before loan release. Depending on your bank, fees may include an appraisal fee of up to 4,000 pesos, a handling fee of 5,000 pesos, and a notarial fee of 500 pesos, as well as documentary stamps and registration fee. Pag-ibig housing loan basic requirements: processing fee, 1,000 pesos before loan release and 2,000 pesos upon loan takeout. Next, duly accomplished Pag-ibig housing loan application form. Then, proof of income such as copy of payslip and other income sources. Next is special power of attorney, notarized by a Philippine consular officer if the buyer is based abroad. Certificate of employment and compensation, and income tax return. Photocopy of valid ID, company ID, passport, Philippine or foreign, Professional Regulation Commission ID, driver's license, Overseas Workers Welfare Administration ID, postal ID, and voter's ID. Pag-ibig also allows borrowers to avail of a housing loan for a combination of the above-mentioned purposes. 1. Buy a fully developed lot not exceeding 1,000 square meters, plus build a residential unit on the said lot. Number 2, buy a residential unit, old or new, plus house improvement. Number 3, refinance an existing housing loan or mortgage plus home improvement. Next is refinance an existing loan for the purchase of a lot plus build a residential unit on the same lot. Regular housing loan program. This is for applicants with above average gross monthly income. Under this program, qualified applicants can borrow up to 6 million pesos with an interest rate as low as 5.375%, 1-year fixed pricing period. Pag-ibig will notify you regarding the status of your housing loan application within 17 days. In case you get denied, you'll receive a notice of disapproval along with your loan document. If your application is approved, expect a call from Pag-ibig informing you when you can pick up your notice of approval and letter of guarantee. Modes of loan payment: post-dated checks, auto-debit arrangement with banks, and salary deduction. To determine how much you can borrow using the Pag-ibig Fund Housing Loan Affordability Calculator, visit the Pag-ibig official website. Bank versus in-house financing. Bank housing loan and in-house financing are just two of the most common kinds of loans buyers avail when they decide to purchase a home. We would like to give you an overview so it can help you in your crucial decision-making process. Bank finance housing loan. Banks have different interest rates and loan terms. The amount of money you can have for a housing loan varies, and it depends on the capacity to pay. The majority of banks offer 80 to 90% of the total contract price for financing, whereas some may only offer 70% financing. Interest rates also vary in every bank, total loan amount, and the loan tenure you have chosen. Because of the high competition among banks, they lower the housing loan interest rates down. The bank loan rates ranges from 5.75% to 11%. You can choose to repay for a maximum of 20 to 25 years, depending on the buyer's age and income. Banks have become more stringent in requirements over the past few years to qualify for a bank housing loan. You just need to submit all the requirements, necessary documents to get your loan approved. Prepare your valid IDs, latest pay slips, income tax returns, contract to sell, among many other needed documents. Banks will secure documents and contact information ready so that they can conduct background and credit check to determine your ability to pay for the loan. In-house financing. In-house financing is taking out a loan directly from the property developer to acquire a condominium, a townhouse, or a house and lot. Compared to a bank loan, in-house financing is less stringent on the requirements and the approval process. One of the best things about in-house financing is that you don't need to look for that far because the developer is willing to provide the loan needed for you to purchase your dream home and move in as soon as possible. You pay the monthly amortization directly to the property developer. Requirements and paperwork are not that detailed and plenty compared of those banks and government agencies. Who can avail in-house financing? Buyers who could not afford enough documents required by the bank, such as proof of income. Buyers who are financially assisted by foreign spouse, parents, or relatives. Buyers with an unsatisfactory credit payment history, or those who have unpaid loan. Even if you have a not so ideal credit history, you have no worries about getting your loan approved because it's less likely to be rejected with little or no credit background check. The developer might even give you special discounts if you pay in cash during the turnover of a unit. The only requirement to qualify for in-house financing is a 10 to 30% down payment of the total contract price and proof of income. Aside from the fact that in-house financing is a bit easier to apply for, their interest rates are fixed and are not subject to volatile political or economic conditions. This is because the developer is shouldering the risk of the possibility that the buyer will not be able to complete the payments in full. You just need to be ready with your funds because you only have 5 years or less to pay off your loan compared to the time frame of banks. This equates to higher monthly amortization ranging from 14 to 15% interest rates. Most pre-selling units are available for in-house financing, not for ready-for-occupancy units. In summary, let's review the 3 available financing options in the Philippines. Pag-ibig. Interest rates for as low as 5.37% per annum. Pag-ibig loans are ideal for buying new or pre-owned homes, condominiums, and for home construction or repairs. Qualifications. Applicants must not be older than 60 years old upon application. Must be a Pag-ibig member for at least 2 years. Must have no foreclosed property or existing house loans. Monthly amortization must not exceed 35%. Required documents: birth certificate, marriage contract if applicable, income tax return, condominium certificate of title or title certificate of transfer, tax identification number, residence tax, visa and passport for OFWs, and business permit for business owners. The lack of immediate funds need not hinder your investment plans or home dreams. With these financial options, there are more ways to purchase a property without hurting your budget. Bank loans. Interest rate 5.75 to 11% in a year, subject to the annual repricing. Buyers can ask for a fixed rate interest period spanning 1 to 5 years. Banks differ in terms of offers, loan terms, and interest rates. They also require borrowers to have a collateral to secure their loans. In most cases, your property will serve as the collateral. Most banks lend up to 80% of the property's actual value. The amount of the loan will depend on your paying capacity. Requirements for this type of financing will vary depending on the bank, the purpose of the loan, the type of the property, and your employment status. Applicant qualifications. Must be aged between 21 and 65 years old. Must be a regular employee for 2 years. Required documents: certificate of employment, income tax return, and financial statements. Condominium certificate of transfer or title certificate of transfer. Payslips and valid IDs. Certificate of business registration if applicable. Marriage certificate. In-house financing. Interest rates 14 to 18%. This type of financing requires less paperwork and guarantees faster processing compared to bank loans. In-house financing, however, comes with a higher interest rate. Developers assist buyers financially by offering payment schemes that match their financial capabilities. In return, buyers must pay their monthly amortization to the developers. If the unit pre-sells at 20%, buyers can pay 10% of the down payment. The rule of in-house financing is simple. The higher your down payment, the lower your monthly amortization and balance. One advantage of in-house financing is that if you pay the down payment in cash, you receive a discount. Required documents: certificate of employment and compensation, source of income, and post-dated checks. Letter of guarantee or LOG. Banks and financial institutions write a letter of guarantee to inform developers of your approved loans. This letter guarantees the developer that the loan will cover for the payment of the property's remaining balance. It also contains information about the amount covered by Pag-ibig or the bank, as well as the date of its release. Owning a home is a great aspiration for every working-class Filipino who wish to make the most of their hard-earned money. This is why flexible payment terms and knowing the availability of financing options is important in making the right decision. I'm Eric Manalo, and this has been your Resus Property Consultancy Training video.